All right, listen very carefully, because the penny stocks I'm about to show you are trading under $1 right now. And if even one of these plays out the way I think it could, we're not talking about 20% gains. We're talking about 5x, 8x, maybe even 10x upside in the right market conditions. And here's the crazy part. Most retail investors ignore stocks under $1. Institutions can't touch many of them. Analysts barely cover them. That's where inefficiencies live. That's where explosive opportunity hides. In this video, I'm breaking down top penny stocks under $1 that could explode. And I'm not just throwing random tickers at you. I'm talking about real catalysts, real revenue growth, real industry tailwinds, and specific reasons why these companies could go parabolic. If you're serious about high risk, high reward investing, if you're hunting asymmetric upside, this is a must-watch. Now, before we go any further, I need a small favor from you. If you want me to keep finding these under-the-radar penny stock gems, smash that like button. Let's aim for 500 likes on this video. That tells me you want more deep-dive small-cap research. And if you're not subscribed yet, hit that subscribe button and turn on bell notifications. Penny stocks move fast. Catalysts hit overnight. You don't want to miss the next 5x runner because you weren't notified. Quick disclaimer before we dive in, I am not a financial advisor. This video is for educational and entertainment purposes only. This is not financial advice. Penny stocks are extremely risky and volatile. You must do your own due diligence before investing any money. Never invest what you cannot afford to lose. Now let's get into it. The first stock on this list is a name that has been quietly rebuilding and positioning itself for a potential turnaround story. Canoo. Canoo trades under $1, and this company operates in the electric vehicle sector. Specifically, commercial EVs and lifestyle delivery vehicles. Now, before you click off and say EV stocks are dead, let's look deeper. Canoo isn't trying to compete head-to-head with Tesla and consumer sedans. Instead, they focus on modular electric vans and fleet vehicles designed for delivery services, government fleets, and commercial clients. The EV market globally is expected to reach trillions of dollars over the next decade. Governments are pushing electrification mandates. Commercial fleets are under pressure to reduce emissions. That's the macro tailwind. Now, why is Canoo under $1? Because they struggled with cash burn, delays in production, and dilution. The stock got crushed. But here's where it gets interesting. Canoo secured partnerships and agreements with government entities and corporate customers. They've received orders from fleet operators and have been working towards scaling production. Their market cap is extremely low compared to what EV companies were valued at just a few years ago. At peak hype, EV startups were worth billions pre-revenue. Now, Canoo's valuation reflects extreme pessimism. If production ramps and revenue begins flowing meaningfully, this could be a major re-rating opportunity. The catalysts, production milestones, government fleet deliveries, funding updates, potential restructuring announcements, any positive earnings surprise, even short squeeze potential due to heavy short interest. If the company stabilizes and shows real revenue growth, the stock doesn't need to go back to hype valuations to 5x from these depressed levels. This is high risk, but that's exactly where asymmetric upside lives. Now let's move to the second stock. And this one plays directly into artificial intelligence and data infrastructure. BigBear.ai. BigBear.ai operates in AI-driven analytics, decision intelligence, and defense-focused technology solutions. Their clients include government agencies and defense departments. AI is not hype anymore. It is infrastructure. Governments are pouring billions into AI-driven defense, predictive analytics, and automation. BigBear.ai provides AI software solutions that help with logistics, cybersecurity, and operational decision-making. Now, why is it under $1? Debt concerns, reverse split history, market sell-off, small cap pressure. But revenue has been real. They have contracts. They operate in a sector that is receiving massive funding. Their market cap is tiny compared to major AI players. If even a small contract expansion hits headlines, this stock could move violently. Catalysts include new government contract awards, defense budget increases, AI sector momentum, earnings reports showing improving margins, and potential strategic partnerships. When AI stocks start running, small-cap AI plays often move the fastest. In previous market cycles, we've seen small-cap AI names run 300%, 500%, even 1,000% during hype waves. If BigBear.ai executes properly, this could be one of those names that retail rediscovers quickly. Now the third stock is in biotech, and biotech penny stocks are where 10x moves are born. Biotech penny stocks can sit dormant for months, and then explode overnight on FDA news. One example type in this category is small clinical stage biotech companies developing therapies for cancer, rare diseases, or neurological disorders. These companies often have market caps under 200 million, yet a successful phase 2 or phase 3 trial can completely transform their valuation. In biotech, valuation is binary. Either the drug works or it doesn't. Catalysts to watch include FDA trial readouts, partnership deals with big pharma, fast-track designations, and regulatory approvals. If a biotech company under $1 announces positive clinical data, it can gap up 200% pre-market. That's the reality of this sector. Now, the fourth stock I want to talk about is in the clean energy and battery storage space. Energy storage is one of the most overlooked sectors right now. Solar is growing, wind is growing, but without storage, renewables can't scale efficiently. Companies developing battery tech, grid-scale storage solutions, or lithium processing technologies are positioned in a multi-decade growth industry. Governments are allocating billions in subsidies and grants for clean energy innovation. If a sub-$1 clean energy stock secures funding, signs a supply agreement, or announces production expansion, the upside can be massive. And here's something important. Small caps move on narrative shifts. When clean energy gets hot again, money floods into anything remotely related. Now let's talk numbers and psychology. When a stock trades at $0.50, many investors psychologically feel like it's cheap, but price alone doesn't determine value. Market cap does. If a company under $1 has a market cap of only $50 million and generates $30 million in revenue, that's extremely low compared to many tech startups valued at billions with no revenue. Re-rating potential is massive if growth accelerates. Another factor? Uplisting potential. If a stock regains compliance and moves to a larger exchange tier, institutional access increases, liquidity increases, visibility increases. That alone can trigger huge momentum. Now let's talk risk, because we must. Penny stocks can go to zero, dilution happens, reverse splits happen, offerings happen, bankruptcy happens. This is why position sizing is critical. You never go all in on a penny stock. These are speculative positions designed for asymmetric upside, not retirement accounts. But here's why I personally love hunting under $1 stocks. Because institutions ignore them, analysts ignore them, media ignores them. And when they start moving, retail piles in late. The biggest gains are often made before mainstream attention. If you look at past market cycles, stocks that went from $0 to $30 to $5 didn't start with media coverage. They started with accumulation. Now imagine one of these under $1 plays announces major government contract, positive FDA trial data, debt restructuring, strategic acquisition, revenue beat, guidance raise, short squeeze trigger. It doesn't take much for a microcap to double, and once momentum builds, FOMO kicks in. That's when parabolic moves happen. Let's zoom out to macro conditions. Interest rates eventually stabilize, small caps eventually rotate, risk appetite returns, AI spending continues, defense budgets grow, EV adoption rises long-term, energy storage demand expands. When liquidity rotates back into small caps, the beaten-down names often move the hardest. This is not about chasing hype. It's about positioning early. So here's the big question. Which of these under $1 penny stocks could realistically 5x? Canoe if production stabilizes and funding improves. BigBear.ai if AI contracts expand and profitability improves. Biotech plays if clinical data hits. Clean energy microcaps if subsidies and partnerships land. Each one has risk, each one has potential. That's the game. High risk, high reward. Now I want to hear from you. Which stock do you think has the biggest chance to 10x? Is it the EV turnaround story? The AI defense play? The biotech moonshot? The clean energy disruptor? Comment below and rank them from most potential to least. And remember, this is not financial advice. Always do your own research. If you enjoyed this deep dive into penny stocks under $1 that could explode, smash that like button. Subscribe if you're serious about finding the next 5x or 10x opportunity before Wall Street notices. Turn on notifications, because the next catalyst could drop anytime. Follow me on Twitter X, where I post breaking stock updates and early alerts. We are here to find asymmetric opportunities. We are here to think differently. We are here to catch explosions before they happen. And I'll see you in the next one.